Have you ever pondered the intricacies of trading using swing high in technical analysis? Well, today is the day to unravel this intriguing concept and its application to your trading strategies. Swing high is a term used in technical analysis that refers to the peak reached by an indicator or security's price. This concept is vital in identifying price patterns and the direction of trends. But how does one identify a swing high? First off, envision a price chart. A swing high is a candlestick at the peak of a trend with lower highs on both the left and right of the peak. In simpler terms, it's like a mountain peak in the midst of two lesser peaks. The swing high essentially represents a shift in control from buyers who were previously able to push prices up to sellers who are now able to pull prices down. Now you might be thinking, how can this help in trading? Let's delve into that. Swing highs serve as an indication of potential resistance levels. When a swing high is identified, traders often anticipate a reversal in price and thus adjust their trading strategies accordingly. So, for instance, if you spot a swing high, it could be an ideal time to sell or short a security in anticipation of a downward price movement. But remember, trading based on swing highs is not a foolproof strategy. The financial markets are influenced by a myriad of factors, and a swing high is just one amongst them. It's crucial to combine the identification of swing highs with other technical analysis tools and market knowledge to make informed trading decisions. In summary, swing high is a peak in the price of a security, identified by lower highs on either side. It signifies a potential shift in market control from buyers to sellers and serves as an indication of an impending price reversal. However, it should not be used in isolation, but combined with other technical analysis tools and market knowledge for effective trading. Understanding and applying the concept of swing highs can indeed be a game changer in your trading journey. It's all about spotting these pivotal points in the market and using them to your advantage. So keep those eyes peeled for the peaks and valleys in those price charts, and may your trades be ever in your favor. End of voiceover.